Jindal Stainless Steel reported their numbers as well. And when you look at it in terms of the numbers, we saw a growth guidance that we are expecting from the margin outlook. What is that going to be is something that we should be watching out from the management. We're joined by Anurag Mantri, Executive Director and CFO at Jindal Stainless, joining in with us this afternoon. Thank you so much, Mr. Mantri, for giving us your time. And firstly, let's just start by, in terms of your volumes, which everyone wants to understand. You've given a volume growth guidance of 20 to 25% this time around for the next 2 years. What gives you the confidence in a tough global macro setup, and with the government withdrawing those anti-dumping duties on import, what is this that is making you so confident then?
You are absolutely right. Actually, the government withdrawing the anti-dumping duty, especially from China, is a big setback, and which actually kills the entire ecosystem of the stainless steel manufacturer, especially the small manufacturer. So we have seen that in the past. For us, the bigger player, we have a very dominate in the quality product segment where we play between the domestic market and export market. India, the quality premium market is still evolving. So we our largest market then remains in export is like the geographies like European Union and US. So there we keep so between the depending on the multiple segment and countries demand, we play between these two geography. Therefore, if you see, our business model is very agile. So in one of the quarter, when we did almost 30% export, but when export duty came in, our export reduced to 5%, but we still continue to grow the volume. So practically, our product range is fungible between domestic and export market. With that, I think we are very confident that we can achieve 20% volume growth this year, and then also in the subsequent year, because we can play in the entire product range. However, obviously, if some protection come at least from the Chinese dumping and create a level playing field from the government, I think the more domestic consumption and the good quality product we can then cater into the more domestic market also. So because that will help the country to build a right quality infrastructure also. So that's our request to the government that to bring back these at least certain protection for the domestic manufacturer from Chinese and Indonesian imports coming into the country.
So then, Mr. Mantri, in this environment, where do you see these costs and margins? Sequentially, there has been an uptick in margins, but where should one look at the margins for FY24?
So if you see, we delivered more than 20,000 and this year. In fact, last quarter we delivered 21,000 plus. But we are guiding for 19 to 21,000 range cautious because it's a start of the year. Second is that because there is no protection for the domestic industry from the Chinese dumping, we need to be because if you see, margin improvement is there, but it's not commensurate with the raw material prices. So eventually, it's somewhere putting pressure on our margin, which is not in a long term good thing for the Indian manufacturer to keep growing the capacities. So because if we will be only encouraged to increase the capacities once we have a right kind of protective environment, especially from the non-level playing field imports. So that with that, but that's why we are giving the margin range of guidance for FY24 from 19 to 21,000. And let's see how it evolves. Hopefully, I think the government, how the government puts the measures and how the global market evolves from all these crises of US debt ceiling, the inflationary pressure. We'll see during the course of the mid-year then how we are moving ahead.
Also, where should one see the CapEx in FY24 then? You've added around 1 metric ton per annum in your Jaipur plant. Talk to us about your CapEx plan on the organic as well as the inorganic front then.
So our large part of organic capex, which were planned, those plants have already commissioned in March, as you said. So with this, we have now 3 million ton or close to 3 million ton capacity, 2.9 exactly. With this, we are now into top 5 stainless steel producer in the world, ex-China. Now, in terms of the capex for FY24, it will be largely the two acquisitions which we have announced. One is JUSL acquisition and the Indonesia nickel mines acquisition. So put together, we are expecting around 2,500 crore CapEx in FY24. So that amount will be there in terms of the cash outflow. And we are planning to largely fund from internal accrual. But however, depending on the cash flow timings, the intermittent debt could go up by around 500 to 700 CR.
I just also want to know and talk about the debt. Your consolidated net debt has run down by around 700 crores in FY23. So where can one see it in FY24 then?
So if you recall last time when we discussed, we talked about, since we were FY23, we were into this Jajpur expansion CapEx cycle. There was expectation that debt will not get reduced. But if you see, we have actually managed to reduce this 700 crore debt in last year. Now there are certain CapEx which are also spillover, and the two acquisition which I talked about. So with this, we are guiding that from here the intermittent period, the debt could go up. Now, and closing the year end, it may again come back to the same level. But depend again, it's a timing. There could be some smaller timing gaps of the few months could be there. But that reduction may not be immediately possible at what currently EBITDA we are guiding. Let's see how the things progresses. Our priority and the capital allocation always remains like this: the debt reduction, the dividend payment to the shareholder, which we started our journey. So these are the two things, and then keep getting the reinvesting in the businesses which are value accretive for the shareholder. So these are the three guiding principles for capital allocation. You have seen us delivering those in last 2 year consistently, and will continue to be as a good governance delivering on these parameters, depending which should be overall value accretive for all the shareholders.
Okay, thank you so much, sir, for joining in with us this afternoon on ET Now, giving us an understanding on what should we be expecting from the company going forward. That was the management of Jindal Stainless.